Hooty-hoo, all my stock market gamblers. I'm Tall Mike. Welcome, welcome. Today is Thursday, October 29th. Today we got the jobless claims number, and it was good news. Good news. Only 751,000 new jobless claims. I guess that's good news. To me, it doesn't sound like good news, but the market has stabilized and we're up about 100 points on the Dow. Now, is the selling over? Is it over? We're going to take a look and answer that question here today. Let's take a look at the S&P. Now, yesterday, the markets just got rocked. Okay, the damage is done. We were sitting right on top of that 50-day, and we just cut through it like butter. The damage is done. We did damage to the market. Okay, so that 50-day that we cut through is now going to become resistance when we go up. Are we going to go up from here? I think we're going to get a little rally. I think we're going to head back to the 50-day, but I don't think we're going to break through it. I think the market has given us the direction it wants to head, which is lower, but keep in mind, that 50-day rally, we dropped the 900 points. We're 900 points away from the 50-day now, so we could have a 900-point rally here before we head lower. But the market direction does appear it wants to go lower. Without a stimulus of, 2 or 3 trillion, we're going to head lower, probably a lot lower, but it's not. We're going to get a little relief rally first. I think we could get a couple days of relief, head up higher even. So what we're going to look at here is the VIX. Now the VIX yesterday, it was, last week it was sitting down here at the $27 level. That VIX shot up from $27 to $40. Now I like the VIX because you can protect yourself. You can protect yourself, but don't buy the VIX here. The VIX is elevated now. But when it's sitting down here at nowhere land, you sometimes want to get a call option just to protect your positions, because when the VIX spikes, it can really spike. $27 to $40, that's a 50% run. If you had options on that, you'd make over 100%. Easy. But don't get the VIX now. VIX is elevated. It's too late to put that type of protection on. But I use the VIX to protect my positions in the marketplace. Now, what I want to take a look at is oil today. Oil today it's getting hammered. It's getting hammered. This is a chart of the USO. The USO in the last week or so is just getting pummeled lower. Today we got hit down to 25 on the USO. Now we're bouncing a little right now, but the USO is starting to come down. Now they're worried about the lockup in Europe. Okay, so if Europe shuts down and goes into another lockup because the virus cases are spiking, and we're spiking here in the US, so we'll probably follow in the footsteps of Europe, where we may get another lockdown this winter, may get a couple of lockdowns over the winter. I don't know for sure, but oil is thinking we're going to be locked down again. It's saying, hey, we're not going to use oil. We're not going to fly in airplanes. We're not going to drive our cars. We're going to be locked down. I don't know. I think oil is starting to look cheap. Now, if it gets down here to this $22 level and fills this gap right here, yeah, I'm a big buyer. Even below $23, I'm a buyer of the USO. So watch it, keep a close eye on it. But what I'm a buyer of right now at where we're at now is Exxon Mobil. All right, so Exxon Mobil this is a weekly chart. So we get to see the big drop. So the economy was going along, and then we just fell off that cliff back in March where with the lockdown came, and it just fell off a cliff. But you'll notice that Exxon Mobil, it kind of had that V-shaped recovery, but now it's back down again. So maybe it's a reverse V-shape. Look we were down here at $30 back in March with the lockdown. We're right back to $31 now. Okay, maybe we go into a lockdown and we get back down to this $30 level. But if we this has a lot of upside potential. People don't realize how much we use oil. They think it's just used for cars. Everything you touch is energy. It's everything that's made is made out of energy. You can't get food without energy. You can't get everything revolves around energy, and you need energy. And Exxon Mobil is not going away. Okay, this is the granddaddy of them. It's going to be here for a long time. I'd be buying some options. I like options, you know that. I'd be buying some call options on the Exxon Mobil. And I'd be buying them pretty far out into next year. You know, maybe, I don't know. I'm just looking at them. I haven't bought them yet. But if we get, on any weakness, I'm a buyer of Exxon Mobil calls. And if we get below 30, I'm going to buy a lot of those calls. So I like Exxon Mobil here, and I like Exxon Mobil calls. Let's take a look at one more today. Okay, so we got Oxy Petroleum, Occidental Petroleum. Once again, the same thing. I mean, this is was plugging along, and then March came. This is a weekly chart, so we just dropped like a rock. Now you'll notice this gap here. Now a lot of times when you get a gap, the gap gets refilled, and it came up and it refilled that gap. The gap went from 25 down to 15, and we went all the way from 10 back up to 25. But now we're back at 10. Actually, we're at $8.90. You don't really need options on this one. This one is an option. It's an $8.90 option. Is it going to go out of business? Is it going to go to zero? I don't think so. Are we going to get a bounce back? I believe we will. Now, we may get locked down again, but there's not much downside here. The downside has already been hit. I don't think, even in a lockdown, I don't think this is going to go much lower. It has the upside potential, but it's going to take some time to play out. It's going to take some time for our economy to get back on its feet, if it ever gets back on its feet. But if you inject another $2 trillion, $3 trillion into the economy, Exxon Mobil is going to have this rally like it had the last time. When it injected the $3 trillion, it went from $10 to $25. You know, that's over a double. You could play options. I'm not saying don't play options. I'm just saying $8.90 is pretty cheap. That it already is an option. You can get an option on this probably for 50 cents or a dollar. And those can double, triple, quadruple. And that would be good. So Occidental Petroleum, it's a buy right here. It's a buy. It's cheap enough to take a shot. Now, I'm a stock market gambler, and this is what I do. I look at charts, and if you want to know some of the secrets, just go to stockmarketgambler.com, and I'll give you my secrets for free. You just put in your name and email. And if you like this stuff, if you liked what we talked about today, hit that subscribe button. Hit the subscribe button and give me a like. You know, YouTube, when there's more likes, it gives me more views, and more people will get to watch my show. Anyways, I'm Tall Mike. This is what I do. I think the selling is temporarily over in the market. I think we're getting a little relief today. We're up 100 points. And we got the big election next Tuesday. Maybe we get a couple days up into the election, and if the market doesn't like the results, we'll come right back down. The market direction's lower, but we're going to get some relief rallies as much as 1,000 points higher on the Dow. So we may have a couple days of a couple hundred, and then we might get slammed again in the election. Big election, get out there and vote. I'm Tall Mike, and we'll talk to you again tomorrow.